Hi there, this is Steve Miley, the market chartist on behalf of forexfraud.com, and we're now looking at both the Aussie dollar and the New Zealand dollar, both against the US dollar in here, and both pointing higher in here, but the Aussie certainly a more bullish tone in here. This rally that we're seeing in here for the Australian dollar, primarily driven, or it's really a sell-off in the US dollar, and the sell-off in the US dollar really primarily driven by a more dovish expectation, having built up in here through late February through early March, a more hawkish anticipation from the Fed. What we've seen in here is since the rate hike on the FOMC meeting on Wednesday, March 15th, the market rallying in here, so dollar sell-off, US dollar sell-off that is, Australian dollar outperforming, and that's anticipation of a slightly more dovish and a more dovish Fed than we previously anticipated since late February. So this Aussie dollar move higher, really now rejecting what we see now is we've redefined. We previously had a range environment at 77.78 to 71.55. We now see a more bearish tone signal below this March low at 74.87, but really the threat is back to the top side through the February peak, and then to challenge this November peak from last year through 77.78, and a break there would see a more bullish tone. So that's the threat for the Aussie dollar. New Zealand dollar, not quite the same setup in here. Our range environment defined still by 74.03 to 68.67. The market clearly rejecting, holding above 68.67 going into the Fed last week on March 15th, and then rebounding from ahead of 68.67 off of 68.86 through the Fed, and then a resilient tone to end last week. So not necessarily a bullish outcome in here, but rejecting a more bearish outcome, and certainly aiming the market back higher into the range, maybe up towards 71, 72 kind of area as we go into the second half of March. This has been Steve Miley, the market chartist on behalf of forexfraud.com, and I wish you a great trading week.